It's about that time of day again, folks. Welcome back to your nightly newsletter, boys and girls. Joseph James here. Wednesday evening, March 16th, 2016. We survived FOMC. We survived inventories on crude. We got some rollover coming here soon. Boy, oh boy, we have another exciting newsletter in store for you guys and gals tonight. A lot of bullish markets on our hands. We don't see that very often. Everything really pointing in the same direction. Tonight we're covering crude, S&P, gold, and euro. And you know tomorrow is going to be another exciting session now that we got the news out of the way here today. We got crude, bullish this evening, but trading at the highs of a channel and directly into a measured move, which tells us to wait for a correction back to support levels before we look to buy more tomorrow. But I'll tell you, the oil market feels very, very strong here as we go into rollover. We might be getting to that $40 a barrel mark before we thought this week. E-mini S&P is bullish with a rising wedge this evening, which tells us to expect a pullback before the buyers re-enter this market. There's a bullseye back at the high of day on the S&P right now. It may pull back a little bit further than we want, but I can't imagine this market's going to go anywhere but right back up on the E-mini. Gold is bullish after the FOMC announcement today with a spike in channel and a triple measured move this evening, which tells us to look for buying opportunities after a two-legged correction off the highs on the gold market tomorrow. We've got a plan for that in just a moment. And of course, the euro is bullish with a spike in channel into a measured move. We have a beautiful double top that appears to have been sold, which tells us to look for a correction back to support levels for the next reliable opportunity on the euro. Got a busy newsletter for you guys tonight. Before we jump into our charts and take a look at tomorrow's strategy, I do want to remind you the only place to watch the full-length version of our nightly newsletter is here on our trading blog at sidewaysmarkets.com. If you're watching this video right now on the YouTube channel, don't forget to subscribe to the YouTube channel, but inside the description of that YouTube video, there will be a link that will take you over here to our trading blog at Sideways Markets. The YouTube video is only a small portion of the full-length version. You can watch the full-length version on our blog, so follow that link in the description. While you're here, don't forget to grab a free pass. Come out and join me in the trade room this week or next week as a guest. Don't forget, you can also register for our nightly newsletter mailing list. Every evening between 7:30 and 8 o'clock Eastern Time, I'll be sending you an email every evening, Monday through Thursday evening, and let you know that newsletter is ready to be watched. Right below the video tonight, you can download all the charts you see me using in tonight's video, right? Download those charts by following that link right below the video on our blog. And then over on the right-hand side, if you'd like to learn more about the different strategies that we use here at School of Trade, not the same thing as your free pass, I'll encourage you to register as a trial member and learn more about what it means and what it feels like to be a student with us every day in our live trade room as an advanced member. And then last but not least, questions. No question too big or too small. If you have any questions for us about anything we talk about tonight in our nightly newsletter, please feel free to use that live support button on the right-hand side. I think we're ready to rock and roll. Boy, I hope you guys are hydrated tonight. Wear your seatbelt. It's going to be a busy one. We got a lot to talk about here tonight. Starting off tonight, first of all, let's look about tomorrow's schedule. Thursday, March 17th. Finally got some big news that we can work with here after the highly anticipated FOMC announcement. We get 8:30 news tomorrow morning and 10 o'clock. Nice news events tomorrow. We get the Philly Fed with jobless claims at 8:30. And then, of course, my gal Yellen's favorite event, right? The JOLTS report tomorrow at 10 a.m. Eastern time. We got news going to get us started off in the U.S. session tomorrow morning at 8:30. And then always love having a 10 o'clock news report because that tends to get, well, suitable for the name. It tends to put a bit of a jolt into the market late in the morning session. Remember, the morning session for U.S. traders, the best time to be trading is always going to be between that 3 a.m. until 11:30 a.m. We'll be opening up our trade room tomorrow morning at 8 a.m. Eastern Standard Time, and we'll be trading live in real time. So come out and join us as an advanced member. Now, jumping into our charts here this evening, you guys know what the news looks like tomorrow. Oh, and one more thing about the news tomorrow. Tomorrow is Reaction Thursday, I should say, right? Not Reaction Monday. That would be the Monday after non-farm payrolls. Tomorrow's going to be the day where analysts that didn't trade the FOMC announcement, traders that stayed away from the FOMC announcement, they'll be coming in to participate, right, in the extra volume and volatility that comes in tomorrow. So there are a couple of these big news events, right? The FOMC announcement and non-farm payrolls. The day after that news is always expected to be another big day of opportunities. So tomorrow, being the Thursday after today's FOMC announcement, will be Reaction Thursday. So look for tomorrow to be definitely filled with a lot more volume, right, a lot more volatility, and hopefully some excellent trading opportunities for us throughout tomorrow's trading session. Now, one definite theme that you are going to see tonight is bullish. Everything appears to be just pegged right to its highs, and most of the markets tonight, in fact, all four of them, are relatively overbought. You know, we never like to tell the market it can't keep going higher because it usually proves us wrong, right? The market does not know overbought or oversold, and so we want to keep in mind that even though the markets, and again, this is going to be pretty much all of them tonight, even though these markets are pinned right at their highs, it doesn't mean it can't keep going higher. The problem is that as professionals, we like to buy low instead of buying high. We're in kind of a precarious, a little bit of a challenging situation right now. Psychologically, it's difficult to stay patient right now. So tomorrow, we may see some very bullish moves even through these. I got a lot of measured moves, a lot of triple measured moves. We're sitting at a lot of channel highs right now. Across the board, everything's very, very bullish right now. Remember, though, buying low is going to be again, it's going to be challenging on our emotions. Even if we start pushing through these highs, you know, right now, boy, it looks like crude wants to just keep on chugging. The most important thing, though, is that over the long run, if you buy high, right, or sell low, right, the opposite, right, you're going to lose money in the long run. So it's really important on a day like, on an evening night tonight where you see where we're all, again, you'll see them in a moment, we're all pegged right to the highs here. It's really important we remember when you find yourself at the highs, we take profit at the highs, we sell out of our longs, and then we wait for those two-legged corrections, right? Those short-term measured corrections back to support levels. And one thing you're going to hear me talk about a lot tonight is as this price is pushing higher, right? We're looking for two-legged corrections, right? Measured corrections into support levels. And this will be kind of different on each chart, but this is going to be the overall kind of scenario looking for. Two-legged corrections back to support levels, right? The support levels might be a prior swing, they might be a moving average, they might be a channel low, right? Whatever the case may be, back to support. And then this is where it gets very important. There are ultimately going to be three scenarios we're going to be looking for. The first one is going to be a failure. Seller failure. I know where their stops are, and I'm looking to buy into their stops. That's the most aggressive. It's also the first opportunity and the most aggressive because at that point, we're in a short-term bearish correction, right? Wait for the sellers to try to sell. You know, there'll be a moving average coming down here, right? They'll try to sell the retracement back to the moving average, and we're looking to buy into their failure. That failure turns into strength, right? So failure turns into strength. And if we see extreme strength, in other words, buyers are buying and the sellers are buying, that's why we love those failures. That will also be a buying opportunity, right, into strength. What makes strength trades a little bit challenging is it requires a wider stop. My stop now needs to really go below these lows, right? And of course, with a failure, right, if you go back in time here, a failure trade, your stop is going to be below the low. But a strength trade, your stop stays the same, right? But now you're getting in at a higher price. So the failure is the first one, right? Stop goes below that low, right? The strength, right? And you'll feel it. It's strength. It's, you know, big green candle. You'll feel it. And again, I love it when we see strength because that means not only were the buyers buying, but the sellers were buying. They were buying out of their position. And hopefully they were reversing their position, right? Flipping it around and buying with us now, right? Knowing that they were on the wrong side of the market. The next one, the third one, is going to be the most reliable, right? That's where we see the buyers actually hold the pullback, right? Again, you'll have that moving average coming around here now, right? They'll hold the pullback, and that's going to be the most reliable, right? So you're going to hear me say this quite a bit throughout the newsletter and tonight, of course, because we have a lot of these scenarios. Failure leads to strength, strength into continuation, right? Continuation back to the high, right? Back to the high. Now, here's the reality. We don't know where the failure into the strength, into the continuation is going to occur, right? If we go back in time here, it could be any of these support levels, right? And so we're going to do our best to identify where the support levels are and then stay patient for two-legged corrections into support, failure, strength, into continuation, back to the highs. And it really doesn't matter if it just keeps blowing through these highs. And, you know, what we always talk about in our trade room is when we find ourselves in the nosebleed seats, right? When we find ourselves in high altitudes like this, resistance areas overhead really don't matter because we're not going to be getting involved at resistance. We want to wait for that pullback. So once we get a pullback, for example, keep an eye out for a short-term measured move, right? AB equals CD. That's going to be your most reliable target. Okay, and again, we don't know where it's going to be. It might pull back very small. It may be a deeper pullback, right? It might be a deeper pullback. We don't know where that's going to be yet. What we're looking at tonight is we know direction. Direction is going to be bullish on all four of these markets. The question right now is going to be how far is it going to pull? Will it pull back, right? And we may have to wait for that pullback tomorrow. So just a good example tonight of kind of one of those problems we run into as professionals. If you want to gamble, just buy right now, right? If you're okay with taking some heat, if you're okay with taking a drawdown, just go ahead and buy right now, right? And you'll be safe. Eventually, it will come right back up. But the key word is eventually, right? And I really don't want you guys just to buy right now, okay? Unless you're willing to take a deep pullback. In other words, if you like the money in your account, right, don't buy yet, right? Wait for that two-legged correction. And I know it might keep going higher, and if you buy now, you might make a quick short-term profit. But again, we're talking about do that 100 times. Do that over a 10-year career, and you're not going to be very successful doing it. All right, let's jump right in. Now that you know kind of the foundation we're talking about tonight. Crude is bullish. It better be bullish right after we just finished off that whole spiel about waiting for the correction. Okay, 1 of 4 markets bullish this evening, but we're trading at the highs of the channel and directly into a measured move. And this is going to be quite consistent, right? This tells us to wait for a correction back to support levels before we look to buy more tomorrow. We have a channel, measured move, a double up, and rollover to work with tonight. Now, the channel has an overshoot at the highs, which tells us buying here is really very expensive. And we want to wait for the overshoot of the opposite side of the channel for the most reliable trades tomorrow. The strength of this move tells us to expect a possible double overshoot, which then turns into an aggressive selling opportunity back at the highs. We're going to see an example of that in the S&P in just 2.5 minutes here. The measured move has been completed, so we know this price is too expensive to buy reliably here. Again, doesn't mean we can't buy it, it just means it won't be reliable to buy it here. But it also doesn't appear to be reacting with very strong resistance, right? This measured move, it doesn't look like anybody is selling out of their trades right now. It definitely doesn't look like any sellers are in the market right now. So the measured move is here, but it doesn't appear to be reacting as very much resistance right now. That tells us to look for a triple measured move, right, for a runaway target overhead today. The double up makes an excellent target for buyers, right, up around that 39, which is also a prior swing. And we do have to keep an eye on the volume right now, watching to see which one of these contracts is going to grab control tomorrow. The way it looks right now, comparing the 416 to the 516, it looks like we're going to be on the 416 contract tomorrow. Whew, did all that work on the 416, I'm glad, right? This is always difficult for me the night before, but it does look like the 416 will have more volume. You can usually tell right away based on how many contracts are traded just after 6 p.m. Eastern time. So we're watching volume. When the 516 contract is more volume, we're going to be looking to buy, we're looking to move over to the 516 contract. Contract expiration has nothing to do with what I'm talking about. We're watching the volume. The expiration date won't be for another 2 weeks. So here we are. We have a bull channel, right? Very easy to see that bull channel, and that bull channel has an overshoot, right? Now an overshoot tells us expect an overshoot on the opposite side, right? So there's that support I was talking about, two-legged correction, right? Failure into strength, strength into pullback, right? And pullback goes back to the highs, right? So this is where what I talked about at the beginning is going to start coming in, right? So the overshoot tells us expect an overshoot on the opposite side. The measured move right now. The measured move really, I think, is the biggest concern. Typically when we see a measured move like this, right, we're going to see at least a correction, and if it's going to go higher, then it will go higher. It doesn't even look like they even blinked, right? It really doesn't. The reality, though, is that this measured move is resistance. It is going to be seen as an area of resistance. It tells buyers to take their profit. It doesn't tell sellers to sell, but we have what appears to be now a double overshoot of that high, which is an aggressive selling opportunity.